Have you ever wished a super smart I could just tell you the best places to invest in real estate? Well, we trained a model to do exactly that, analyzing over 10,000 property listings, rental data, migration trends, and job growth stats to uncover the top 5 U.S. cities for real estate investment in 2025. And guess what? The city at number 3 will probably surprise you. Let's dive in. So how did we build this list? Our AI model looked at 6 key indicators: home price appreciation, job and population growth, rental yield, affordability index, migration patterns, and local economic development. In short, we let data, not hype, decide which cities made the cut. Coming in at number 5 is Raleigh, North Carolina. Over the last decade, Raleigh has become a tech and biotech powerhouse, home to companies like IBM, Red Hat, and Cisco. It's also a major college town, which means consistent rental demand. The median home price is just over $400,000, and average rental yields are around 5.2%. It's affordable, it's growing, and it's steady, which is exactly why the AI flagged it as a smart long-term bet. At number 4, Tampa, Florida. With no state income tax, a booming population, and strong short-term rental activity, Tampa is quickly becoming a go-to spot for both traditional and Airbnb-style investors. In 2024, home prices rose nearly 8% and demand continues to climb. Add in the lifestyle appeal and strong job numbers, and you've got a data-backed winner. Here's where things get interesting. Number 3 is Detroit, Michigan. Now, I know what you're thinking. Detroit? Really? But here's the deal. Median home prices are still under $200,000, and the rental yield is a whopping 9.1%, the highest on our list. The city's undergoing serious revitalization, especially in areas like Midtown and downtown. Startups and creatives are returning, and with them, new housing needs. For investors willing to take a bit of risk, Detroit offers major upside. It's not just a recovery story, it's an opportunity. At number 2, Phoenix, Arizona. Phoenix is one of the fastest-growing big cities in America, with massive job growth in healthcare and tech, and a steady flow of new residents, especially from California. The median home price sits around $445,000, and demand keeps outpacing supply, which is great news if you're thinking rental income. AI marked Phoenix as a city with strong long-term ROI and consistent economic momentum. And finally, topping the list at number 1, Austin, Texas. Austin has become a tech capital in its own right, with companies like Tesla, Google, Apple, and Oracle all expanding here. It's culturally vibrant, economically strong, and despite rising home prices, rental returns remain solid, around 7.5%. AI ranks Austin highest thanks to its explosive growth, job opportunities, and long-term investor confidence. So, what do all these cities have in common? They're all growing, economically, demographically, and in housing demand. They've got strong rental markets, diverse job sectors, and they're backed by real data. In 2025, successful real estate investing isn't just about knowing the market, it's about knowing how to read the data. And with AI, we now have tools that can make those insights clearer than ever. So, which city surprised you the most? Would you invest in one of these? Drop your thoughts in the comments and don't forget to like, subscribe, and hit that bell, because next week we're covering the 5 worst cities to invest in, according to AI. See you in the next one.